Hello, everybody. Welcome to the Energy Newsbeat podcast, but it's also a joint podcast with Mark Perlberg. He is a Mark Perlberg CPA. Mark, welcome. How are you today?
Doing fantastic. How about you?
Oh, fantastic. We wish you were here. We're here at the Oil and Gas International Show in the Permian Basin, and we also have RT here. RT is with the Crude Truth and Pecos Operating. How are you today?
I'm doing well. This is so much fun. I've never done something like this, taking the show on the road, and it has been a hit. So far, I couldn't ask for better weather.
Oh yeah.
I mean, we've got people now looking at us as we walk around.
Yeah.
It's I feel like one of the sports commentators or something.
And
big NBA finals when the Spurs win. You know, just got people walking around.
Oh yeah. We got oil rigs and everything else.
We do. This is awesome. So if anybody's out there watching, thank y'all so much. But I want to get back to the CPA of CPAs, Mark Profitability.
Oh, we love Mark. Hey, Mark, we are fans. Tell us how we find you on Mark Perlberg and your podcast.
Sure. Just search thanks for the introduction. Search the Mark Perlberg CPA podcast on any major podcast player. You can also search just Mark Perlberg CPA on YouTube. I'll show up. I post daily on Instagram, LinkedIn, and TikTok too. Just find me wherever you're online.
I'll tell you what, Mark, I'm a fan. I almost feel like a stalker there, RT, because I'm over there every time you're pushing out stuff. I'm like, there's Mark. I know him. And what we're seeing here is we are seeing some weird things out here in the market. I'm talking to a lot of folks that are really concerned, Mark, about tax season. 'Tis the season for taxes coming up around the corner. And I'm just so thrilled that you and RT put that ebook out there about, people are in the real estate business and they're concerned about taxes. There's about 19 different things. And as always, I don't give investment advice because I am not worthy to be a CPA. On the other hand, I happen to know a great CPA. So what are you hearing out there?
Well, here's what I'm thinking. When we think about opportunities for tax deductions and savings, and we're also evaluating the economic environment here. With interest rates grow, let's look at how oil and gas compares to real estate for a sec here and look at the changes. Well, we specialize in real estate investing, and real estate investing is still one of my favorite asset classes, and we don't try to encourage our clients to go one way or another. If you're a masterful real estate investor, that's what you do. Now, but here's the things we're considering. One, interest rates are up. So the profitability on your real estate is going to go down. And also there are other sorts of challenges with pricing, and there is some fear in the market for our real estate investor clients. And also, we're going to go from 100%. We've already gotten down to 80% bonus depreciation for acquisitions in 2023. It's going to be 60% in 2024. So the value of your depreciation acceleration with those cost segregation studies is going to be less valuable from a tax savings perspective as well. So what we're seeing is our real estate investor clients are having a harder time finding deals that are less profitable, because you're using leverage with real estate, and the tax benefits aren't as strong as they were 2 years ago when we were at 100% bonus depreciation. Wow. So, in real estate, while you do see so many benefits and the benefit of leverage, and, I'm still all for real estate, but with our clients, when we talk about different opportunities to reduce taxes and to generate cash flow legitimately, passively, for a lot of our clients who are affluent, who maybe don't want to be full-time landlords, or maybe did this because they were more incentivized by the wealth and the taxes and really weren't as much into the game of actually managing properties and being a landlord, they're becoming more and more interested in oil and gas.
Mark, one thing, as you continue to talk, I want to kind of throw you off subject here. One thing a lot of people always tell me.
For a podcast host, we have three podcasters here, kind of like you chewing on each other.
No. Sometimes I hear people, especially in the oil and gas industry, that are like, well, I needed to buy a new truck this year for a tax write-off. now trucks are running anywhere between $60,000 to $120,000. Is that still worth somebody to do every year, or should they invest in something like actually in an asset rather than just a brand new truck every year?
We get asked a lot of these types of questions. I would say if you need a truck or you want a truck, we can talk about how we can make that potentially tax deductible. But I've always been weary of purchasing large vehicles like that based on the tax implications. And I'll tell my clients, hey, here's another way you can get a tax write-off. Just pay me more. How about that? Like that truck is going to depreciate and it's going to lose value as soon as you take it out of the shop, and you still got to pay for the truck.
Right.
So I think that you buy the truck if it's going to help you out in your business, and you're not going to be able to write off 100%. You get the 80% bonus and then 60% if you start it next year. So, yes, there's still advantages, but I think as we lose our bonus depreciation, it becomes more, what's more important, and even more important, is that we're doing this only if we need it for our business and it helps us generate more profit.
Well, I mean, and that's the crude truth. I'll play my hook, more profit. And that's what you do with your clients from a tax advantage, is you're finding ways for them to save money on their taxes by them earning more profits. And one of those ways is through the oil and gas investments that they do every year.
Yeah, absolutely.
So, with this being tax season, here we are in October, about to get into November. What is one piece of free advice you can share with everybody out there about tax?
And don't send them a bill yet.
Yeah, don't send them a bill.
About taxes. Okay. Well, one thing I would say is if you are an entrepreneur making over $250,000, or you have a combined income of $500,000 or more, if you are not meeting with a tax professional to make year-end tax decisions, you guys should all just write this down. If you're not doing this, then you either need to call that person, or you need a new advisor who is deliberately, proactively making sure that they are doing everything they can with you to minimize your taxes before the end of the year. That's probably the most important thing. Now, I can give you a whole world. I know I could go on for hours on what you can and should and might want to do, but here's the thing: if you're not a tax professional, if I were to provide one most important thing, that one nugget is just make sure you're talking to someone to make sure you've done everything you can to set yourself up for success, create tax savings for the current year, and also to prevent future taxation with some of the actions you can do in the current year.
Hey, Mark, what do we do right now in tax season? It is now October, and we're sitting here getting ready to roll into November. Do they have time to do things in order to reduce their tax burden this year?
Oh, absolutely. I mean, you could probably, could they, obviously oil and gas is one opportunity, and you guys probably are still sending out PPMs and have opportunity to invest in you, right?
Right. Yes. Absolutely.
Yeah. So,
absolutely.
There's a lot you can do. You can still set up retirement accounts. You can still liquidate stocks. You can still create some capital losses in your portfolio if they're there. You can still create more. So we have some more sophisticated and complex financial vehicles that'll create tax savings. That most of those transactions will actually occur in the last quarter of the year. I would say that the majority of the tax planning and the value we can provide in that is going to be between October and December, because now we know, we have a clearer picture of what has taken place for the clients, what is their expected income, and what are the tax implications, and what can we do before the end of the year now to in reaction to those items.
Okay. Well, RT, on the 1031 exchange and investing into you, can you guys talk just for a hair on why oil and gas investing may be something? And guys, I'm just going to throw this out here a little bit. There's a big change, and I've been talking to folks like Kyle and others around there, that there is a change because natural gas is becoming more accepted even to the ESG folks, because we're now realizing we got to have natural gas just to get there. And so people are now going, oh, wait a minute. And in COP 28, Mark, that's now coming up, they're about to announce natural gas is going to be even more accepted.
Yes.
So that's going to open it up for folks that are wanting some ESG investing. So with that, guys, tell us a little bit about the difference from your side and what some of your funds are that you have, and then help Mark talk. This is like a multifold question, Mark, how you've helped folks as well, too.
Well, my funds, Stu, and thanks for the question. We are we drill oil wells there at Pecos, and every now and then we bring on private investors that may want to take advantage of those tax deductions that Mark talked about. But more importantly, actually, they then get additional monthly revenue. And as Mark knows, they're actually able to write off up to 100% of their investment in some cases. So what we're doing right now is putting people in oil and gas drilling ventures with revenue, with return. Right now, I've got one project that the first month check would have averaged out to 25% a year. The next month's check averaged out to 50, and the third month's check. So that means for the whole year, we should at least see, if we don't do anything else, natural gas prices don't go up and oil prices don't change, which they shouldn't, knock on wood, go down anytime soon. We'll see a 50% on return on those investors' money in the first year alone.
Nice.
So right now, with your question about natural gas, if you can afford to grab it and hold it, because natural gas is still a low price,
right?
Still under $3 an MCF. But as the COP 28 is going to show, and the rest of the world's going to see, natural gas is going to become the main transition fuel source for the next 100 years.
Right.
And that means that as America continues to export it, we'll continue to sell it to the rest of the world, and that price will go up. Why? Because of good old-fashioned economics 101,
right?
Supply and demand. Now, transferring over to Mark, what are you guys seeing here with the oil and gas investments, Mark?
So, it's not that we, because we're not really keeping our finger on the pulse of the changes in economic events and, all the things that you just mentioned. What we're doing is we've educated our clients on the profitability and the tax treatment. And what we're actually doing here, especially this guy right here, Groucho, we're considering this as an alternative to a lot of things that clients may have defaulted to reduce their taxes. And it's an alternative to putting money into a 401k and having to wait until you're 59 and a half to be able to use those funds. We've actually used it as an alternative to not only real estate, but also as an alternative for some capital gains planning. Now, what's interesting here is you can use it to, you're not going to be able to offset capital gains directly, but if you have active income, and usually that's taxed at your marginal rate, which is taxed higher, you're actually deducting it against a source of income that's taxed higher, and then the impact of those deductions are greater than the taxation on the capital gains event at this long-term cap gain. And another really unique thing we're doing is we're using it as an alternative to S corporations, where we have a client who has $250,000 Schedule C sole proprietor activity, and the client's in a high tax bracket from other sorts of income. So we could put it in an S corp to reduce taxes, but then we have to run payroll and create another entity and charge for another return. But if we do invest in oil and gas, we can reduce the FICA taxes as we reduce the federal and state taxes. So that's an additional deduction of 15%.
Nice.
In addition to the federal and state taxes. So these are just opportunities we're bringing to our clients.
That's pretty darn cool. Yeah, I got my Turley Energy Group is a S corp, so I just absorbed that, Mark, and I'm gonna.
Yeah, it's pretty cool.
It is. So, all right.
Well, Mark, I can't thank you enough. I've got to get you on the Crude Truth here real soon to dive more into taxes and being a CPA and how a qualified CPA can really lead somebody into great prosperity. So I've got to get you on to talk about that.
Yeah, that'd be great.
All right. Hey, and Mark, how can people get a hold of you?
So, the best way to do it is email info@markperlbergcpa.com. That'll my admin will see it. But then, and again, if you search me, you won't have a hard time finding me, Mark Perlberg, CPA. If you want to learn more about what we do. Also, I recommend on my website, markperlbergcpa.com, you can get on our mailing list, and then you'll get invited to free live webinars. A lot of my podcasts are live, and you can chime in and ask questions while I riff on topics. So a lot of different ways to connect.
And you got great information, Mark, and your free ebook. Anybody that wants his free ebook there's some great stuff in there on the 1031 exchanges. RT, how do people get a hold of you?
Yeah, please, check out my LinkedIn, Rey Trevino, and of course you can always email me at thecrudetruthshow.com.
And I'm Stu Turley, President CEO of the Sandstone Group. Thank you all for stopping by. And Mark, we will be right back with you guys later. All right. Thank you all very much.